Dan Ives just dropped a bomb on live TV. This AI company will be worth $1 trillion, and it's not Microsoft. Stick with me, because you're about to see the clip where he says that. Hear my reaction, and get one deep, actionable reason why I think Palantir could be a buy right now. Dan Ives, Wedbush's global head of tech research, made those bold claims on CNBC's Closing Bell while talking about Palantir, calling it the gold standard of AI, and predicting massive upside. I'll play that exact clip for you in a moment. Right after, I'll walk you through what he actually means, why the market cares, and how that translates to real investment implications. If you only watch one video today, make sure it's this one. Hit the like button, share it with a friend who follows AI stocks, and drop your take in the comments. Subscribe so you don't miss future market-breaking analysis. Let's roll the clip and then unpack every line Dan Ives said.
So there's a lot to live up to. The valuation's big by any metric. The analyst community is expecting a lot, whether it's at the high end of expectations or even the whisper numbers above that. So how do you assess it?
I mean, look, I just continue to view it, it's the gold standard when it comes to AI use cases. Look, from all of our work, 70 to 80% of every AI use case, Palantir is ultimately involved with. And when you put in, like, you're talking about in terms of the AI trade, pieces of the puzzle, I think this is going to be $1 trillion market cap in the next 2 to 3 years. So in terms of the actual quarter, U.S. commercial business, that continues to really be the story here, because as you start to look, this is going to be ultimately a $1-2 billion business. That's why I think valuation just over the next year, you miss what I view as really a transformational, almost historical growth.
I know, but that's a lot of hyperbole around a story that you're obviously positive on. I mean, I'm talking like, obviously the expectations are, you need to see like the growth rate.
Yep.
Like how high does the growth rate have to be relative to where the valuation is, relative to a stock that's already up 170+% year to date? Like the new orders, like what kind of growth do they need to show there? So superlatives aside, what about the stuff that matters most?
I think U.S. commercial business is really what I view as, it could be an 80, 90, ultimate 100% grower. And I think when you start just to put numbers around that, I mean, Scott, this one that was 25, 50 million that I believe now could be on a trajectory over the next 12 months to be $1 billion. So when you actually put that together, that means the valuation is one where you go from 2-3 billion of free cash flow, what could ultimately be 7-8 billion of free cash flow in the next few years. That's how you're going to justify the valuation. I think also it's what Karp talks about, not just on the government side, but on U.S. commercial.
Well, the commercial's 45% of their sales.
Yep.
At this point. Does that take the onus off of their reliance on government spending?
Yeah, I'd say 45% of revenue, 80 and 90% of the valuation. So when you think about government business, even though it's shut down, and obviously that could be a little dent, I actually think on the federal side, that's actually going to be a beat relative to all the high AI projects that we're seeing from a priority perspective. But what the street focuses on here, it's all about commercial. It's about this company essentially disrupting the whole software landscape, and that's essentially what Karp and Palantir have done.
It's so interesting too. Like it's a retail loved, almost a culty angle to this stock. How do you view that? The fact that retail is so highly engaged with this name.
Look, I think retail has been well ahead of institutional. I mean, I could go back. I mean, you've talked about the last few years. Institutional hated this name. Hated 20, despised it 50, yelling from the mountaintops at 100. I do think institutional has missed what maybe retail saw in terms of the commercial business, in terms of AIP, that was really transforming what Palantir is going to be over the coming years. I do think institutional now warming up more and more to it, because the reality is that you cannot just dismiss what they're doing with essentially no direct sales force. And I think that just speaks to the demand that we're seeing.
You have a thought on that, Michael? This cohort, now powerful, probably more powerful than ever, cohort in this market that supports stocks like this come heck or high water?
Right. I mean, it's this almost self-generating enthusiasm for a very select character of stock. So I pointed out for a couple of years now, Palantir and Robinhood were the same chart. And that just sort of shows you they're just drawing off the same kind of self-reinforcing mechanism of, hey, we're all here loving this stock. We still love it. We love it more because everybody loves it. And I'm not saying that that's without basis, because Robinhood's actual business has been growing extremely rapidly as well, as is Palantir. But Dan, if you're right about $8 billion in free cash flow years down the road, it's a $500 billion market cap right now. That's a 1.6% free cash flow yield. That's Microsoft today when it's over-investing in CapEx on this year's numbers. So, that just gives you a sense of how much credit has been given to Palantir in advance, given the trajectory.
Now, look how much, you're giving them a ton of credit. You're talking about $1 trillion market cap.
Because look, my view is that you're going to have $3 trillion that's going to be spent in the AI revolution. When you think about software use cases, 30-40% of that is going to ultimately be software. Now, how much does Palantir get versus Snowflake, versus Salesforce.com, versus Oracle? But again, it's pieces to the puzzle. If you look not just on hyperscalers, but Palantir, they're a core piece on the AI use case. And I just think what Karp's doing is unlike anything we've ever seen in software.
Dan Ives starts the interview by addressing the elephant in the room, Palantir's massive valuation. He admits it's big by any metric, and that expectations from analysts and investors alike are sky high. The stock has already surged over 170% year to date, and that's before even factoring in the lofty whisper numbers, those unofficial expectations floating around Wall Street. But despite those concerns, Ives doubles down, calling Palantir the gold standard when it comes to AI use cases. According to him, 70 to 80% of all artificial intelligence applications somehow involve Palantir's technology. That's a massive statement. He's basically saying Palantir has its fingerprints on almost every major AI development out there. From his perspective, Palantir isn't just another software company riding the AI hype, it's one of the foundational players in the entire ecosystem. And that's why Ives believes this company could reach $1 trillion market cap within the next 2 to 3 years. He's that confident. To him, this isn't just growth, it's transformational, maybe even historical. Now the interviewer pushes back, pointing out that the valuation is already rich. Palantir's stock is up sharply this year, and for it to justify that kind of price, it needs some serious growth numbers, not hype, but hard results. What kind of growth rate would actually make sense for a stock already trading at such high levels? Dan Ives answers that head on. He focuses on Palantir's U.S. commercial business, the part of the company that sells to private enterprises instead of government agencies. That, he says, is the real story. According to Ives, this segment could grow by 80, 90, or even 100% year over year. He believes that a business that was only bringing in about $25 to $50 million could soon scale up to $1 billion over the next 12 months. If that happens, the free cash flow could jump from $2 or $3 billion to as much as $7 or $8 billion within a few years. And that, he says, is how the valuation starts to make sense. He also makes an important distinction. While government contracts have always been Palantir's bread and butter, the commercial side is what's driving its current and future value. Right now, commercial clients make up about 45% of Palantir's revenue, but Ives estimates that they account for 80 to 90% of the company's overall valuation. In other words, the market is betting big on Palantir becoming a dominant player in private sector AI. He even points out that the federal business, which some people worry could slow down due to budget uncertainty, might actually surprise to the upside. That's because many U.S. government AI projects are still in high demand, especially for national security and defense-related work. But make no mistake, Wall Street isn't focused on that anymore. As Ives puts it, it's all about commercial. Palantir's future, in his view, lies in disrupting the software industry as a whole. At this point, the interviewer shifts gears and brings up something interesting: the cult-like enthusiasm surrounding Palantir among retail investors. This is one of those rare stocks that has a massive following of everyday traders who truly believe in it. The question is, how does that influence the stock's performance? Ives actually praises retail investors here. He says retail traders have been well ahead of institutional investors on this one. Institutions, he reminds us, used to hate this stock. They were negative on it when it was trading at $20, still skeptical at $50, and even now that it's approaching $100, they're only starting to warm up. Meanwhile, retail investors saw something early: the rise of Palantir's commercial AI platform, known as AIP, which he says is transforming the company from the inside out. Ives argues that Palantir's success is even more impressive because it's achieved all this growth without a traditional direct sales force. That's almost unheard of in enterprise software. To him, that's proof of massive organic demand. Companies are lining up for Palantir's AI tools without being aggressively sold to. Then, another commentator jumps in, noting that the retail enthusiasm around Palantir feels self-reinforcing. It's like a feedback loop. Investors love the stock because it's going up, and it goes up because everyone loves it. He compares Palantir's chart to Robinhood's, saying the two stocks almost move in sync, showing how powerful retail-driven momentum can be. It's a cycle of hype, community, and genuine business growth all feeding into each other. But even with all that excitement, there's a dose of realism. The analyst points out that if Palantir does eventually hit $8 billion in free cash flow, that would imply a market cap of around $500 billion based on today's metrics. That's only about a 1.6% free cash flow yield, roughly the same as Microsoft, which is already one of the world's most profitable tech giants. The takeaway: Palantir's current valuation already prices in a ton of future success. There's not much room for error. Dan Ives doesn't disagree, but he adds crucial context. He argues that we're still at the very beginning of the AI revolution. He expects around $3 trillion to be spent globally across the AI landscape, and 30 to 40% of that will go towards software. Companies like Palantir, Snowflake, Salesforce, and Oracle will all compete for that massive pie. But in his view, Palantir holds a unique position, because it's not just another software vendor, it's part of the core infrastructure that's powering AI itself. He even says what Palantir's CEO, Alex Karp, is doing is unlike anything we've ever seen in the history of software. So, to sum it all up, Dan Ives is doubling down on his bullish outlook. He believes Palantir is fundamentally reshaping the software and AI industries, and that its commercial expansion will be the engine that takes it to a $1 trillion valuation within a few years. He acknowledges the high expectations, but he argues that the company's growth trajectory, expanding cash flow, and unmatched AI integration justify the hype. My takeaway? Whether you agree with Dan Ives or not, there's no denying that Palantir has become one of the most fascinating companies in the AI space and one of the most polarizing stocks on Wall Street. It's a story that sits right at the intersection of technology, innovation, and investor psychology. Retail investors see it as the future. Institutions are finally catching on. And if Ives is right, we may be watching one of the biggest AI success stories of our time unfold in real time. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now, let's dive into the incredible reason to buy Palantir stock now. Co-founded by Peter Thiel, Palantir built its reputation serving U.S. government and intelligence agencies with its Gotham platform. Unlike most tech companies, Palantir's software was forged in high-stakes, real-world environments. This resulted in a platform that's robust, secure, and able to handle chaotic data from countless sources. The big question: could Palantir bring this power to the commercial sector? Enter Foundry, designed to give businesses the same integrated data operating system. Initial adoption was slow, but that's changed dramatically. The commercial world, especially in the US, is now embracing Palantir's platform at breakneck speed. Companies are integrating Foundry deep into their operations. This is a fundamental shift in Palantir's growth story. What's the single most compelling reason to consider Palantir as a top investment right now? It comes down to one thing: the company's explosive momentum in the US commercial sector, a transformation that's rewriting the narrative for this once government-focused tech giant. The U.S. commercial business is on fire, posting growth numbers that are turning heads across Wall Street and Silicon Valley alike. In Q2 2025, Palantir's U.S. commercial revenue didn't just grow, it skyrocketed, soaring an astonishing 93% year-over-year. That's not just impressive, it's nearly unheard of for a company of this scale. For a company with Palantir's established footprint, such rapid acceleration signals a fundamental shift. It's a sign that something profound is happening beneath the surface, something that could reshape the company's future trajectory. This isn't a one-off spike or a lucky break. It's the direct result of a deliberate, focused strategy to bring Palantir's cutting-edge, AI-driven platforms to the heart of the private sector, where demand for advanced data solutions is exploding. Today, the U.S. commercial segment accounts for nearly a third of Palantir's total revenue. That's a dramatic evolution from its roots as a government contractor, and it's transforming Palantir into a true enterprise software powerhouse, one that's now competing head-to-head with the biggest names in tech. This shift doesn't just diversify Palantir's revenue streams, it de-risks the business, making it less dependent on government contracts and proving that its products resonate with a broad spectrum of industries, from healthcare and finance to manufacturing and logistics. Foundry, Palantir's flagship platform, is now an indispensable tool for optimizing supply chains, accelerating research and development, and enhancing customer experiences. Companies are relying on it to make smarter, faster decisions in a world where data is king. Palantir isn't just selling software licenses, it's embedding itself as the digital operating system for modern business, integrating deeply into clients' daily operations and becoming mission-critical to their success. This creates a sticky, recurring revenue model that's both lucrative and resilient, with long-term contracts and high customer retention rates. The significance? Palantir has crossed the chasm from early adopters to mainstream enterprise acceptance. It's no longer just a niche player, it's a force to be reckoned with in the broader software landscape. For investors, this is a true game changer, one that could unlock massive value as Palantir cements its place at the center of the digital enterprise revolution. Palantir's U.S. commercial growth isn't just strong, it's accelerating. In Q1 2025, growth was 71%. In Q4 2024, 64%. In Q3 2024, 54%. Now 93%. This is exponential, not linear. Each quarter builds momentum, signaling massive product-market fit. Early adopters' success stories are fueling a flywheel. More leads, more customers, more success. This is how software giants are made. Palantir's total revenue grew 48% year-over-year in Q2, surpassing $1 billion in quarterly revenue for the first time. Its trailing 12-month revenue is now over $3 billion, a milestone few software companies ever reach. The U.S. commercial division is acting as a rocket booster for the entire company. This isn't just one successful segment, it's a transformation of the whole enterprise. The acceleration is real, and it's reshaping Palantir's future. Investors are taking notice. Revenue growth is great, but what's driving it? A rapidly expanding customer base. Palantir reported 849 customers at the end of Q2 2025, a 43% increase year-over-year. New clients aren't just testing the waters, they're deploying Foundry across multiple departments from day one. This shows a mature market that understands Palantir's value. Existing customers are also expanding their usage, driving up net dollar retention, a key metric for SaaS success. When clients spend more over time, it means Palantir is delivering real value. This combination of rapid new customer acquisition and strong expansion is the holy grail for SaaS. It creates predictable, profitable growth. Palantir's customer flywheel is spinning faster than ever. What's fueling this demand? Palantir's artificial intelligence platform, or AIP. Palantir isn't just about data analytics, it's an AI company at its core. AIP lets organizations build and deploy AI models on top of a unified data foundation. Most companies struggle with messy, siloed data. Palantir solves this first, integrating everything into a single model. Once the foundation is set, AIP acts as a force multiplier, enabling secure, powerful AI applications. From airlines optimizing schedules to pharma accelerating drug discovery, Palantir turns AI's promise into operational reality. Unlike standalone AI tools, Palantir offers an end-to-end operating system for the modern enterprise. Customers aren't just buying software, they're buying a strategic capability for the AI age. That's why Palantir is becoming essential for data-driven enterprises. Accelerating U.S. commercial growth, a surge of ambitious customers, and a best-in-class AI platform, Palantir's future looks bright. The company is no longer just a government contractor, it's rapidly becoming a powerhouse in the private sector, with its technology now powering everything from healthcare analytics to supply chain optimization. As more organizations realize the value of Palantir's data-driven solutions, the company's influence is expanding far beyond its original roots. Wall Street is catching on, projecting 38% annual revenue growth for the next 4 years. This kind of momentum is rare, and it's fueling excitement among both institutional and retail investors. Analysts are starting to see Palantir not just as a niche player, but as a potential leader in the next wave of enterprise software and artificial intelligence. If that holds, Palantir could hit $15 billion in annual revenue by 2029, a 5-fold increase. That would put it in the same league as some of the world's most influential tech companies, fundamentally changing how industries operate and make decisions. Yes, the stock trades at a premium, with high price-to-earnings and price-to-sales ratios. For some, that's a red flag. But for others, it's a sign that investors are willing to pay up for a company with a unique position and a massive addressable market. But Palantir isn't just growing fast. It's highly profitable, with margins above 30% and rising. That level of profitability is rare among high-growth tech firms, and it gives Palantir the flexibility to reinvest in innovation, talent, and global expansion. Most hypergrowth companies burn cash. Palantir is self-funding. This financial discipline means the company isn't reliant on outside capital to fuel its ambitions, making it more resilient in uncertain markets and better positioned for long-term success. The argument isn't that Palantir is cheap, it's that its growth and market opportunity could make today's price look like a bargain in hindsight. If Palantir continues to execute, the company could redefine what's possible in data, analytics, and AI. When a company is reshaping industries, traditional metrics can miss the long-term potential. Palantir's technology is already disrupting legacy systems, and its ability to adapt and innovate could unlock entirely new markets. The key for investors: watch execution and whether U.S. commercial momentum can be replicated globally. International expansion will be crucial, as will Palantir's ability to navigate regulatory challenges and local competition. Palantir's trajectory is set for something big. The company is at an inflection point, with the potential to become a defining force in the age of artificial intelligence and data-driven decision-making. The question is, will it deliver? Only time will tell if Palantir can turn its vision into reality, but the next few years will be critical and potentially transformative for both the company and its investors. Here's the real question: how does Palantir's accelerating commercial adoption change its long-term value? Palantir is breaking free from its old identity, launching into a new orbit as an enterprise software giant. Think of other tech titans. There were always doubts, but those with game-changing products and massive markets kept growing. Palantir's U.S. commercial acceleration is a paradigm shift, proving its platform's broad appeal. As success stories spread, more customers will follow, creating a virtuous cycle. Imagine this momentum replicated in Europe and Asia. The scale is staggering. Now's the time for forward-thinking analysis. What could Palantir be worth in 2029 or 2030 if this trajectory continues? Great investors see the paradigm shift while it's still in motion. We've explored Palantir's explosive U.S. commercial growth, surging customer base, and powerful AI platform. This isn't hype, it's a fundamental shift, backed by hard data, but investing is about your own analysis. What do you think? Is Palantir's commercial growth sustainable, or is the valuation too high? Share your thoughts in the comments. I read everyone. Do you see Palantir becoming the next enterprise software titan, or are there hurdles ahead? If you found this breakdown useful, like, share, and subscribe for more insights. Let's keep the conversation going and navigate the future of investing together.